Hey there, and welcome to another deep dive with us. Today, we're going to be diving into Tony Robbins's Money, Master the Game. It's a pretty dense book, but honestly, it's like a crash course in building wealth, even if you're starting from, zero.
Absolutely. And you know what's really interesting about Robin, his approach? He doesn't just give you like a bunch of stock tips or anything. He actually goes deep into like the psychology of wealth, which I think is so crucial, especially if you're new to investing.
Yeah, that's actually what really hooked me on the book too, right? He compares the financial world to like a jungle. It's exciting, there's a lot of potential, but it's also, kind of scary. There are a lot of traps hidden in there. So what kind of mental traps are we talking about here, and how do we like avoid falling into those?
Okay, so one of the biggest traps, especially for beginners, is letting fear and like limiting beliefs kind of hold you back. Right? I think a lot of people just assume that financial freedom is this like exclusive club for the already wealthy, but Robbins like completely shatters that myth. He talks about this janitor, for example, who actually became a multimillionaire because he changed his entire mindset around money.
Okay, so it sounds like it's really about like shifting your perspective first, believing that financial success is actually possible, even if you aren't, born with a silver spoon.
Exactly. It's all about adopting what Robbins calls a wealth mentality. Taking control of your financial future and realizing that you have way more power than you think to change your financial situation.
That is so empowering.
Yeah.
So once we've like, tackled our mindset, what's the first concrete step that Robbins recommends?
So the very first step that Robbins really emphasizes is like consistently saving a portion of your income. He calls it building your freedom fund.
Okay, so is this like the part where we have to make a budget?
Yeah.
Because honestly, those always stress me out a little bit.
Think of it less as like a restrictive budget and more like a plan for your ideal financial future, right? And what Robbins emphasizes is automating this process. So you set it up so that like a certain amount is automatically transferred to a savings account or investment account every month. You don't even have to think about it. And that's where, the magic of compounding comes in.
Compounding. Okay, yeah. I've heard that term thrown around a lot, but honestly, it kind of just sounded like financial jargon to me.
Yeah, yeah, it's one of those terms, right? But it's actually a really simple concept with like, massive impact. Basically, compounding is earning interest on your interest. So, Robbins illustrates this really well with this example of two brothers. One starts investing early in life, the other one waits.
Okay, I need to hear about these brothers. This sounds juicy.
So the brother who starts early, even if it's with like smaller amounts, ends up with significantly more wealth in the long run. Why? Because over time, those investments aren't just growing, they're actually generating their own returns.
All right.
And then those returns are reinvested and they generate even more returns, right? It's like the snowball effect.
Ow. Okay, yeah, that makes it like crystal clear, the power of starting early.
Hmm.
I guess it really is true when they say the earlier you plant a tree, the bigger it'll grow.
Exactly. And that's what Robbins really drives home. Time is your greatest asset when it comes to investing. It's even more valuable than, trying to time the market, which honestly trips up so many new investors.
Okay, so we've got our mindset in check. We're going to start saving early, let that compound interest work its magic. But now comes the like kind of tricky part, right? How do we actually figure out where to put our money?
So before you even think about specific investments, Robbins dives into what he calls the 9 myths
Yep.
about investing. These are like really common misconceptions that he says can seriously hurt your returns if you're not careful.
Ooh, myth busting time. I am here for it. Okay, give me an example. What's one of these sneaky myths that we should be aware of?
Okay, so a big one, and one that trips a lot of people up, is this belief that like the advertised returns from mutual funds are actually what you're going to end up taking home. Robbins reveals that a lot of these companies actually bury these hefty fees in the fine print. And these fees can really eat into your profits over time.
Wait, are you serious? So those returns, those advertised numbers, they're not even the whole story. Okay, hold on. What are these hidden costs? And like, how much are we even talking about here?
So one sneaky culprit is something called an expense ratio. It's this annual fee that's charged as like a percentage of your investment to cover like the fund's operating costs, right? But Robbins points out that when you factor in things like expense ratios, transaction costs, taxes, all those little fees, it can add up, right? Like he says that it can gobble up to like 3.17% or more of your potential gains.
3.17%. I mean, okay, that might not sound like much at first, but over time, that is a huge chunk of potential earnings, like literally vanishing into thin air.
It really is. It's the perfect example of how, like, a seemingly small detail can have this massive impact on your long-term returns. And unfortunately, it's something that a lot of beginners, they're completely unaware of.
Yeah. And it really highlights why it's so important to, be an informed investor from the start. Like
Yeah.
they say, knowledge is power, right? Especially in this world.
Okay, so how do we fight back against those hidden fees? Like, how do we become those informed investors? I remember Robbins talking about this whole thing about becoming an insider. What does that even mean? Do I need to, like, go to some fancy cocktail party and schmooze with Wall Street bankers?
Not quite. No need for the cocktail dress just yet. When Robbins talks about being an insider, he's really just talking about like understanding the rules of the game. Knowing how the system works so you don't get played. And a really crucial part of that is finding a fiduciary advisor. Okay, fiduciary advisor. I feel like that's one of those terms you hear thrown around a lot, but maybe a little refresher wouldn't hurt.
Right. So essentially, a fiduciary advisor is legally obligated to, like, act in their best interest. Okay. That means their own financial incentives or their firm's incentives, those come second. Your financial well-being is their top priority. They're legally bound to that.
Okay, that is reassuring. It's like having, a financial expert on your team who's actually like genuinely looking out for you. How do we find these financial superheroes, though?
Well, good news. Robbins actually provides like resources in the book for finding fiduciary advisors in your area. He even gives you like this whole checklist of questions to ask potential advisors just to make sure that they're, the real deal, that they truly are aligned with your best interests.
Okay, love it. So we're thinking like investors. We're saving diligently, we're dodging those sneaky fees, and we've got like a trusted advisor on speed dial. Check, check, check. But like now for the real question. How do we actually go about investing our hard-earned money? Robbins talks about this bucket strategy. Is he talking like literally, are we talking like, those buckets you build sandcastles with?
It's a metaphor, but it's a really helpful one. He's suggesting you think of like dividing your investments into three metaphorical buckets, okay? There's the security bucket, the risk growth bucket, and the dream bucket. You're essentially organizing your money based on, your goals and how much risk you're comfortable with.
Okay, color me intrigued. Let's like break down these buckets. And I kind of want to start with that, that security bucket.
Sounds good. The security bucket, that's all about protecting your money. This is where you'd put the funds that like you absolutely cannot afford to lose, okay? It's all about low risk, low return investments that are really just designed to preserve your capital.
So if the financial world is this like wild jungle that we talked about, the security bucket is like our safe haven. What kind of stuff would go in there?
Exactly, exactly. So Robbins recommends things like short-term U.S. Treasury bonds. Those are considered very safe because they're backed by the government. You've also got things like FDIC insured accounts. Those are the bank accounts that are insured by the government up to like $250,000, I believe.
Got it. So it's like stability, peace of mind. That's the priority for our security bucket. Now, the risk growth bucket, this is where things like get a little spicier, I think.
You got it.
Yeah.
This is where you allocate funds for investments that have the potential for, higher returns, but also obviously higher risk. We're talking stocks, real estate, even things like high yield bonds, which, yes, they come with a greater chance of default, but they also offer the potential for much more significant returns.
High yield bonds, those are the ones that like sometimes get called junk bonds, right?
Yeah, exactly. And they're called that for a reason. They can be riskier, but remember, higher risk, often higher reward, right? It's all about finding that right balance for you.
So the risk growth bucket, we're embracing a little bit of uncertainty, right? A little bit of a wild ride, potentially, in pursuit of those bigger gains. Okay, and last but not least, the dream bucket. This is like where our wildest financial aspirations live rent-free, right?
Exactly. This is for those big, hairy, audacious financial goals. The ones that would like truly change your life if you achieve them. Early retirement, travel the world, buy that dream vacation home, whatever, really gets you going, gets you motivated.
Love it. But like those dreams, they can feel really expensive, kind of overwhelming, honestly.
Yeah.
So how do we like make them feel less intimidating and more achievable?
Well, that's where, the power of compounding, patient investing, and a long-term perspective all come in. Even if you can only contribute a small amount to your dream bucket initially, those consistent contributions, combined with that magic of compound growth over time, can create like incredible results down the line.
Okay, so even small steps consistently over time can lead to big life-changing results.
Okay. I like it. Now, you mentioned earlier that Robbins highlights like some investment strategies that billionaires actually use. And one that really caught my eye was this thing called Ray Dalio's all-weather portfolio. What is that?
Oh, it's fascinating.
Here.
So Dalio's all-weather portfolio is all about building a portfolio that can thrive in any economic climate.
Yeah.
So like no matter what the market throws your way, you're prepared.
So it's like weatherproof. My investment portfolio equivalent of a really good raincoat. How does it work? Exactly. Dalio, he identifies like these four key economic seasons, if you will. You've got inflation, deflation, rising economic growth, declining economic growth. His portfolio is designed to perform well in all of those different economic environments.
Okay, yeah, that makes sense. But how do you actually like build a portfolio that can handle all that? What kinds of things do you even invest in?
It's all about diversification, right?
Yeah.
Dalio's all-weather portfolio includes like this really strategic mix of stocks, bonds, gold, and commodities. And the thinking is that like these different asset classes, they tend to respond a little bit differently to economic shifts. So by having a little bit of everything, you're kind of, you're protected no matter which way the market goes.
So it's about spreading your risk and like creating a more resilient portfolio. Kind of like how, they say eating a variety of healthy foods is better than just like living off pizza, although I do love pizza.
Exactly. And just like with healthy eating, building a diversified portfolio is like generally seen as beneficial for your long-term financial health.
Okay, this whole all-weather portfolio sounds pretty sophisticated. Is this like something that's manageable for like a regular person, or do you have to be like a Wall Street wizard to pull this off?
Well, that's the great thing about Robbins' book. He explains even like these more complex strategies in a way that's like really accessible. And remember those fiduciary advisors we talked about? They can help you tailor these kinds of strategies to your needs and your risk tolerance.
That's good to know. So it's not about like, being a financial genius or anything. It's about having the right information, asking the right questions, and maybe, getting a little help from an expert when you need it. All right, we've covered a lot of ground here. Mindset, compound growth, dodging those hidden fees, fiduciary advisors, buckets, and we even got a sneak peek into like a billionaire's playbook. But there's one more concept from the book that I'm kind of curious about. We briefly touched upon annuities earlier, and I have to confess, like, whenever I hear that word, I just think of those, confusing insurance commercials. My eyes kind of glaze over a little bit. Is this even something that, like, a new investor should be worried about? Or is it more like, advanced level stuff?
Yeah, annuities definitely have that reputation, right, for being a bit uh, complex, to say the least. And to be honest, some of them are probably best avoided, especially if you're just starting out. But, one thing Robbins does really well is he breaks down the different types of annuities, and he actually explains how, like, certain annuities in the right circumstances can be these really powerful tools, to reach certain financial goals.
Okay, so you've officially piqued my interest. What are these like potential advantages of annuities? Why should we even bother trying to understand them at this stage in the game?
So one of the biggest appeals of annuities, and this might make more sense, as you get deeper into investing, is that they can provide this like guaranteed income stream for life. It's like creating your own personal pension almost.
Okay, a guaranteed income for life. Yeah, that does sound kind of nice, especially, when the market can be so up and down. Kind of terrifying,
Yeah.
honestly. But how do these things even work? Is it just another type of investment? Like, are we buying stocks or bonds or what?
They're a bit different. They're more like an insurance contract almost for your retirement income. So basically you pay a lump sum of money to an insurance company, and in exchange, they agree to make these regular payments to you. And those payments, they can either be for a set period of time or sometimes they can even last for like the rest of your life.
So instead of like directly investing in, those assets, the stocks, the bonds, whatever, you're essentially like buying a stream of future income.
Exactly. And that predictability, it can be like incredibly valuable, especially when you're retired and you no longer have that like regular paycheck coming in. It gives you that peace of mind, knowing that you've got this source of income you can rely on no matter what the market does, no matter how long you live.
That makes a lot of sense.
Hmm.
But I do remember Robbins mentioning that there are like different types of annuities, some that come with way more risks than others. Can you kind of like walk us through the different options, like what's out there?
Yeah, definitely. So Robbins talks about like fixed annuities, variable annuities, and then there's these things called indexed annuities. And each one has like, its own pros and cons, its own quirks. It's like with any investment, right? You really want to make sure you understand what you're getting into before you hand over any money.
Okay, so let's break this down a little bit, starting with like The
Right.
simplest option, what's a fixed annuity?
Okay, so fixed annuities, those are kind of the most straightforward to understand. With a fixed annuity, you're guaranteed like a specific interest rate, right? For a set period of time. It's actually pretty similar to like a certificate of deposit CD that you might get from a bank. But typically, fixed annuities, they have the potential for like slightly higher returns than a CD.
So kind of get our security bucket. Fixed annuities are all about like stability and predictability.
Yeah.
Okay, what about these variable annuities? Those are the ones I've heard, like the scary warnings about, right?
Yeah. Yeah, variable annuities, they are definitely more complex. And they do come with like higher risks attached. So with a variable annuity, your returns are actually tied to the performance of like underlying investments, which are usually like a portfolio of mutual funds.
So it's like a mutual fund, but wrapped in like an insurance policy.
Yeah, you could kind of think about it like that, but they do often come with like higher fees than you'd find just investing in, a regular mutual fund. And those fees, as we talked about, they can really eat into your returns if you're not careful. And actually, Robbins, he's pretty critical of variable annuities in the book. He thinks they're often like way too complicated, they're expensive, and they don't always deliver on what they promise.
Okay, noted. We're watching out for those fees for sure. So we've got fixed annuities, all about stability. We've got variable annuities, the kind of riskier ones. So where do these indexed annuities fall on the spectrum?
So indexed annuities, those are kind of like a hybrid almost. They're somewhere in between fixed and variable. So with an indexed annuity, your returns are actually linked to the performance of like a specific market index. Like a common one would be the S&P 500, but they usually have a cap on potential gains, which, that can be a bummer. But they also often have like a floor which protects you from losses.
So you get like some of the growth potential of the stock market, but with, a little bit of a safety net if things go south. That kind of sounds like the best of both worlds.
It can be, but like it's so important to understand, the fine print of any annuity contract because they can be structured in like so many different ways. Robbins, he's a fan of these things, kind of a fixed indexed annuities. He says those can be particularly useful for like generating a stream of income in retirement.
Okay, so it's clear that annuities are definitely not like a one-size-fits-all kind of thing. Each one has its own, personality, its quirks, its risks, its potential rewards. It seems like this is another area where, having that trusted fiduciary advisor in your corner could be really, really helpful.
100%. Like a good fiduciary advisor, they can really help you, navigate the complexities of annuities, help you figure out if it even makes sense for your situation, for your goals. They can make sure you understand all those fees, all those terms and conditions.
This deep dive has been amazing. We've journeyed from like, mastering our money mindset all the way to exploring
Yeah.
like the nuances of annuities.
Hmm.
And all of this through the lens of Tony Robbins' Money, Master the Game. We've really uncovered some super actionable insights that I think can help anyone, no matter where they are in their financial journey, really take control of their financial future.
And, I think the most important takeaway here is that financial freedom, it's a journey, right? It's not like you just arrive one day and you're done. It's about constantly learning, making those informed decisions, and, having the courage to actually take action.
And if you're ready to like continue on that journey, Robin's book is a fantastic resource. Like he really packs it with practical advice, real-world examples, inspiring stories. It's like having your own, personal finance coach in your back pocket.
Don't forget, that first step is always the hardest. Start by mastering that mindset. Embrace that power of compounding by saving early. And whatever you do, don't stop learning.
From, really understanding the psychology of wealth all the way to building a portfolio that can like weather those financial storms, we really hope that this deep dive has equipped you with the knowledge, the tools, and the inspiration to really navigate the exciting, sometimes terrifying, always interesting world of finance and investing. Until next time, remember, your financial future is in your hands.